Hey, welcome back to the channel. Jeremy here. I'm going to try a new vlog format. I hope you guys don't mind me filming between doing sets in the gym. This week I had a few exciting things I wanted to cover real quick. Yesterday I closed on my 37th property. If you see my recent video, this is the $500,000 property. It was a lease purchase deal. I'll put a link up here if you want to watch that video. But I closed on the purchase, and the lease purchase tenants took occupancy the same day and paid rent the same day as well. I love doing lease purchase deals like this because as soon as you close, they automatically go into autopilot. You don't have to look for a tenant. They cash flow immediately. Basically, I ask the tenant to put down 20% or more, then I go shop for a house with them. Their monthly payment is only 1% of the net amount that we spend on the house. So that's 1% times however much we spend on buying the house minus how much they put down on the house, so they're encouraged to put more down. So I make a little bit of money on a monthly basis on the payment. And then on a go-forward basis, we basically split the increase in value in the property. And so I tell these tenants, hey, would you rather make half of something or all or nothing? And so it's a great deal for both of us. The typical lease purchase client needs 2 or 3 years before they get their credit right or their income right in order to qualify to get their own loan. And in the meantime, they get to live in a house and call it their own, make the improvements they want, as well as earn half of that equity along with me. This brings my monthly rental income up to $60,000 a month. I still have 3 other properties under contract, 2 of which I'll close next month. Once I bring those online, I'll be up to $64,000 a month in rental property income. And once I close on the 3rd property I've got under contract, I'll be at $66,000 a month in rental property income, and I'll be at $9.6 million in real estate assets. The 2 other investment properties I have under contract are both estate properties, and so they've both gotten delayed with closing a few times. And so one challenge I've got coming up is that both of them need a remodel. One needs about a 2 to 3 week remodel, and the other needs 4 to 6 week remodel. As they're becoming delayed, I've also got another property that's coming vacant around the same time that needs to be remodeled. So I've got 3 properties that need to be remodeled at the same time, and I just have 2 full-time guys that work for me. So I was thinking of just trying to re-rent the one that's coming up again as is, but it's so outdated. I don't really want to do that. So I called up a couple of contractors to see if they were interested in doing some remodeling work for me. So I took them out to one of the properties under contract. The realtor let us in, and we walked around it together. And then I took them to the one that's about to become vacant in about a month, and my tenant let us walk around. And so he's working to give me a bid on those. So I figure if I can have him and his team working on 2 of the properties, and my full-time maintenance guy and his helper doing a lot of the odds and ends on all 3 of the projects, I think I can handle 3 remodels simultaneously. Another opportunity that came up recently that I'm looking at is a 6-unit, 100-year-old house. It's a property owned by my father, and he had his business in this house. I lived in this house with him during high school and college. It was a big old house downtown that we split up into 6 units, and so a lot of family history here. I wish my kids or brother and sister or someone in the family could keep this property, but no one else seems to be interested in it. But he's been retiring and selling a property a year, and so now it's time for him to sell this one. He keeps asking me if I'm interested, and I tell him I don't really like multi-unit families. I like single families because it's a lot more work, right? He mentioned that the rents are really low and there's opportunity to increase the rents, and I told him that he could probably get a lot more money if he would update them, because the amount of rents is going to dictate the appraisal and sales price value of a multi-unit. Once you get over 4 units, value becomes strictly based on the amount of rents that you're getting. So he doesn't really want to fool with that right now, and he said, well, there's some opportunity, if you'd like to buy from me and you fix it up slowly and sell it for more, you can do that. And so I started thinking about it, and I'm having him run some numbers on it, and I'm crunching those numbers now, and I'm trying to figure out how I can get the thing to cash flow based on the current rent rate, which might cause it to be worth a lot less when he gets the appraisal in. So we'll look at this together. One thing that I'm going to look at as well is that I also mentioned to my dad the possibility of looking into doing an installment sale on this property. And so what that would involve is to where we would structure the deal to where I only paid him so much each year, and that could be over 2, 3, or 5 years depending on how much he wanted to get and defer some gain. Since he's had it for a very long time, he's probably almost fully depreciated the property, which would cause him a lot of recapture gain, and so the capital gains rates would be significant in this $400,000, $500,000, $600,000 property range. We got on the phone with his CPA and mentioned some numbers. His CPA basically said if we structured it like that, we could probably save him about $40,000 in taxes by just spreading that out over 2 years. And if we hurry and are able to do this by the end of the year, I could basically pay him, say, half the property in December and then half in January. He could split up the gain in half in those 2 separate years and save a lot on his taxes. Oh, hey, another interesting thing that happened this week, assuming you think any of this is interesting, by the way. was that I got another inquiry about my lease purchase program. So I called this person up. And by the way, it's the coolest way I do this. On my website, I simply made a simple Google form, which you can make for free if you have a Gmail account, right? And it asks, 5 or 6 questions. That auto-populates a spreadsheet, and then it emails me when someone fills it out. So I just gave a link to that Google form to GoDaddy, who added it to my website. So I get 1 or 3 of these a week, and most of the time people say they've got 1,000 or 3 to put down on a house they want me to go buy for them, so I simply don't respond, obviously. What I ask for is if people have 20% or more down, then we can potentially shop for a house together. Then I'll lease purchase it to them, basically as long as they need until they can qualify. So anyway, I called this lady had responded, and she mentioned she could put down 10 or 20%, and she wanted to buy a $500,000 to $650,000 house. And so these are the kind of deals I really love, because you're leveraging a lot more money and growth potential with fewer deals. It takes about the same amount of time to buy a $100,000 house as it does a $1 million house. And then if you only have, one tenant that you have to work with instead of, 5 or 6 people, it's just a lot more efficient. So I like doing the bigger deals in this scenario when people are putting down, say, 20%. If they don't buy the house, I'm very secure with that non-refundable deposit. So anyway, I called the lady back and I'm talking to her for a few minutes, just kind of introduce myself and saying, hey, here's kind of the big picture. Is this really what you were interested in? And so on, are you really going to put down up to 20%? How much do you have now? She had about 30,000 now, and we get approximately 70,000 more by the end of the year. And so we're just sort of talking through that. And so then I started asking her, well, what about timing? When are you moving to Chattanooga from Atlanta, where she was calling from with her area code? And I said, oh, wait a minute. You're not talking about buying a house in Chattanooga, are you? You're talking about Atlanta. She's like, yeah, is that a problem? And I said, well, I generally don't like to buy out-of-town properties, but with a lease purchase deal, 20% down position on your end, I'm pretty sure you're going to finish this deal, and it's not like a rental property that I have to go to often. And so I actually might consider this. Since I have 3 properties in Georgia anyway, most of my stuff's in Tennessee, I'm probably, 2.5 hours from where she's talking about. I'm actually kind of interested in exploring this and going into a new market. Atlanta ranks, I think, in the top 3 of the nation in terms of affordability from a rental property perspective, as well as just doing business as a landlord in the state of Georgia. So all those things make me interested in doing this deal. So I just kept her on the phone for no more than 20 minutes, talked about some next steps where she's going to fill out the application, send me driver's license and proof of income and proof of funds and those sorts of things. She sent me one house that she's interested in that I thought was great. She's going to look for some other properties. So I'm really excited about expanding into another market. It motivates me to work hard, buy another property or do another deal, and then get it set up on autopilot so it makes money passively while I'm sleeping, working out, vacation, etc. I don't mind to work hard knowing that it's something that's going to make me and my family money for years to come. So even if I'm only cash flowing a couple of $100 a month on a property, somebody might say, why are you going through all that effort for a couple $100? Well, several things. Well, first of all, you're also probably paying down the loan, maybe $100, $200, or $300 a month. It's basically a forced savings plan. The property's probably also going up in value with appreciation. Over the last couple of years in my market, it's been 15% or something, which is abnormally crazy high, but on a long-term basis, that might be only 5% or so. And so think $500,000 per $100,000 of a house you own, for example. So do the math on that. There's another really nice income stream on an annual basis. And then a fourth stream of income is going to be tax savings as you depreciate these properties, and it allows you to lower your tax rate on your earned income from your day job, etc. And then when you go to sell these, of course, you'll get capital gains rates, which are some of the lowest tax rates in the tax table. And then over time, you'll also make more money because rents will increase with inflation. Your cost will not rise nearly as much because most of your cost is that payment on your property, and that's generally a fixed cost. Your taxes and insurance will go up, but that's not a significant component of your cost. And so over time, you'll make more profit margin every year as rates go up. So those $200 a month properties, when I bought them over the past years, are now something like, maybe $500 or $600 a month in positive cash flow on a monthly basis. So multiple ways you make money on a property. And again, it excites me to work hard and bring another asset online that just makes money passively every day, every night, every second. It would help the channel a lot if you would smash the like button. And don't forget to put a comment that says AirPods to be registered to win a pair of Apple AirPod Pros that Lily's is giving away to one of our first subscribers. Hurry up and do that because we're about to hit 1,000 subscribers. You can also go back to all the previous videos and just add a comment, AirPods, and you'll get registered, another chance to win as well. Thank you so much for your support. We'll see you next week. Okay guys, this is Macey Phillips. She has 65,000 followers on Instagram, Macey Phillips Fit. Did I say that right?
You did.
So I just wanted to give a shout out to her on the channel. I put a link in the top of this to her channel, and check her channel out.
Thank you. Appreciate it.